Hi everyone, welcome to my commerce class. Today we are going to understand accounting process. Accounting process is nothing but recording the transactions, financial transactions in the books of accounts. The books of accounts is a set of books where we find journal entries, ledger accounts, and trial balance and other financial statements. Together it is called bookkeeping. Okay, bookkeeping is nothing but recording the transactions in various format of accounts. Okay, so this format of accounting, what we call bookkeeping, may be single entry system of accounting or double entry system of accounting. So single entry system of accounting is a partial where we are not going to consider the dual concept of debit and credit. In other words, so a transaction, financial transactions, as we learned in the previous class, contains two accounts, dual concept. One is debit, another one is credit. But in single entry system, we are going to make a record of any one part, maybe the debit or the credit. One account from each transaction will be considered. Sometimes for some transaction both may be considered, but not for all transactions. So that means it is an incomplete record. So it is an incomplete where you are not going to get an accurate result. Accurate result is not possible. So you cannot get the exact profit or loss of the business. For example, cash paid to Aravind. So for example, you may just make an entry in the cash account. Okay, cash paid so and so 6,000. Or you may record only in the Arvind account because he may be a regular customer who is visiting your shop, maybe having many credit transactions and all. Just you'll open the Arvind book and you'll make a record, and you're not going to enter in the cash book. So likewise, so either cash or in the Arvind, any one record will be done. Likewise, if you take the example of interest received. So interest received is an income. Okay, so there is a one cash account, another one is interest account. But you may record it only in the cash book. Or if you have a separate notebook for interest and all, you'll just make a entry in the interest, so interest received. So that means it's an incomplete. All both the transaction dual concepts are not recorded. So it's not possible to get the trial balance, and you will not get a accurate balance sheet also. So but even today many sole trading organizations, petty organizations or sole trading organizations, sole trading companies we call small business units. Okay, small business units, even today they are following a single entry system of accounting, but it will not give the clear picture of the organization. But some of the organization, especially for large scale organization, it is better to go for double entry system of accounting. What is double entry system of accounting? A double entry system of accounting is a complete record of business transaction where you are going to consider debit as well as credit concept. Both the concept, that's what we call dual concept. So as we know, each business transaction contains two accounts. The one will be debit, another one will be credit. So both the transactions will be recorded in both the accounts. That's what we call dual, so that your business result will be accurate. You are going to get a accurate business result. So accurate result be possible only when you follow this double entry system of accounting. So why this happens? No, because for example, you take an example of journal entry. So when you make a journal entry, you are going to consider the format of debit and credit. You identify both the accounts. The one will be debited, another one will be credited. So likewise, when you make a ledger accounts also, you'll have a debtor and credit. creditor, like debit side, credit side. And trial balance will also have the debit and credit column. So all these transactions going to complete only when you consider this dual concept. If the dual concept is considered, it will be easy to prepare balance sheet where you are going to take into consideration assets and liabilities. So wherein assets going to match with the liabilities. Assets will be equal to your liabilities. That means that's balance sheet. So there is a match between assets and liabilities. It happens only when you consider a double entry system of accounting. That's a dual concept. That's what we call debit and credit. Okay, take an example like cash paid to Anand. So cash is one account, another one is Anand account. Here Anand account will be debited and cash account will be credited. So why the Anand account is debited and why the cash account is to be credited, we'll understand by learning the golden rules of accounts. Okay, and later one more example, purchased goods for cash. The one is purchase account, another one is cash account. So likewise maybe salary paid. Salary paid. So when salary paid means it is cash only. Okay, so it will be in terms of cash. The one is salary account, another one is cash account. For example, like rent received. So rent received, the one is rent account, received means it is in terms of cash only. So that means we have rent account and cash account. Likewise in each one you will get two accounts. Each business transaction, each financial transaction, we are going to consider only monetary transaction where we are going to identify two accounts. Okay, so and one account to be debited, another account to be credited. Which account to be debited and which account to be credited, how you are going to understand by learning. First you should understand to identify the accounts like goods account or purchase account, cash account, salary account, cash account, rent account, cash account. First you should be able to identify the account, then you should learn the rules of account to debit or credit the each account.